Hi and welcome to Matrix Moments. This is Saloni, and this episode is an audio recording from a recent Clubhouse session that Tarun Davda, Managing Director at Matrix Partners India, did with Priya Rajan, MD at Silicon Valley Bank, as well as Anand Chandrasekharan, who is Executive VP at Five9. Anand was formerly Director, Messenger Platform at Facebook, and prior to that, CPO at Snapdeal. In this episode, they cover the latest trends emerging in India tech, Matrix's investment strategy through and post-COVID, IPO and M&A trends, among other topics. Tune in.
Tarun, thank you for taking time today, but also being patient with us as we're kind of rescheduling and bringing it back up today.
My pleasure, and thank you for having me. I've been looking forward to doing this as well, so excited about this chat.
Great. I know we're right at time, so maybe we can just get started. For the folks who are new to this room, thank you again for joining us. This is a series that Anand and I host as a part of the India-US Venture Ecosystem Club called Behind the Scenes, and we have featured several of the top-tier investors and founders who are active in the India-US cross-border ecosystem. And we've done this for since October, November of last year. And we started doing this once a month, and we received quite a bit of request and interest in doing this more often. So we started doing this once in 2 weeks. With that said, we did pause for a few months, as I said earlier, because of obviously the pandemic, and wanted to focus on the right things. And now things are getting back. We felt this is now time for us to kick back and bring the series back, and obviously. What best way to kick it off with Matrix obviously was an active investor in the cross-border ecosystem. And Tarun, again, thank you again for taking time today for doing this. With that said, maybe we'll just dive right in. Tarun, maybe you can start off with a quick intro about yourself, and we can also talk about a little bit about Matrix India, and we can go from there.
Sure. Thank you again, Priya and Anand. Thank you for having me on this. Just for a quick introduction for those who don't know me, I run a firm called Matrix Partners India. It's an early stage VC focused on broadly seed to Series B investments in internet and sort of mobile ecosystem in India. Been with Matrix now 9 years, so seen enough cycles, and honestly think we're at the most exciting time in the Indian venture ecosystem as we speak, with so many IPOs coming. Before that, been on the operating side. I ran 2 startups. The first one was a company called Big Rock, which was actually incubated within DirectEye, and DirectEye wasn't well known back then, but obviously everyone knows Bhavin and DirectEye now. With all the success they've had. That was acquired by a European listed firm called Endurance. And then after that, I tried to do something a little bit more edgy, so set up a dating site in India. This was again way back in 2000, I think 10 or 11. And I think Sasha will remember me pitching to him. But way ahead of its time, way before real identity on the internet was a thing, way before online payments was a thing. So clearly ahead of its time, didn't really work out. Saw a lot of traction, but couldn't monetize, and eventually we had to sort of fold into Match.com. And yeah, so that's been a little bit of my background. At Matrix, I focus broadly on 3 or 4 sectors. The ones that I'm most excited about right now are social and gaming, and I'll talk about some of the investments we've made there. I spend a lot of time on commerce, and within commerce, specifically social commerce, and we'll talk about DealShare and a few other investments we've made there. And I look at mobility. And obviously Ola is well known, but there's a bunch of other younger companies that I work with in that space as well. So those are the 3 sort of core verticals that I spend time on.
Awesome. You've been keeping those exciting things that you've been doing as a secret. I didn't even have that as a question, but Anand, I'm sure we have to ask some questions there as we go through this. Maybe I know you touched a little bit upon Matrix. Maybe you can, if I can kind of double click a bit more from a broader Matrix India standpoint. What is your investment strategy, and what it like in general, but also how has it been through and post-COVID?
Yeah, so Priya, VC firms are fairly boring creatures, and the less they change, the better it is. But so at the surface, nothing has changed, but I'll talk about, two or three interesting sort of themes that we're following now. So we've always been founder backers. I don't think that will change. Our biggest successes have been in backing extraordinary founders very early, even if we don't really understand the market or don't really understand what they're building, because essentially we're backing the player, right? And so it's less about the race for us. I know there's a lot of investors out there who believe in backing the race and not the horse. For us, it's very clearly we back the horse. We're looking for founders who truly inspire us, truly teach us new things every time we spend time with them. Obviously all the other sort of intrinsics around grit and persistence and all that aside, but essentially that's our bread and butter. We continue to do that every day, and that hasn't changed through COVID. Have there been some sectors we're just kind of tactically spending more time on post-COVID? Absolutely. The obvious ones being at tech and gaming and some of those, but I think those themes are kind of overdone now. The new themes that I'm excited about, there's a lot happening in the creator economy space, and I'm spending a lot of time there personally now. I think there's a lot of themes which are unique to India. So if you look at, a lot of the V1 of internet in India has been basically things that were already done in the US or China, right? And so if you see food tech and ride hailing and e-commerce and broader horizontals, a lot of those themes were basically borrowed from the US and China, and then, in some ways Indianized. I think we're starting to see more bottoms up Indian innovations. And I think that's a broader theme that we've been sort of chasing. Within that, a bunch of B2B themes, especially in sort of B2B marketplaces, moving all sorts of boring things like steels and raw materials and seafood and a bunch of other things that we think are just solving unique to India problems. Stuff like just devotion, right? We recently committed to something in the devotion space, and I think those are things that are so unique to India. And what's exciting about that is there's no predisposed, hey, this is the way it should be built, right? And so I think that's something that I really like spending time on, because it kind of keeps all of us intellectually motivated. And then the third thing that I'm trying to spend time on is, everybody's brought, like, keep talking about this California, Indians, which are all online, all transacting, 50, 60, 70 million internet users, which is broadly 10, 15 million households at best, right? And the question we've been asking ourselves is, hey, how do you get the next 50 million households, which is the next 300 million sort of internet users, to transact online? And Anand is also an angel in this company called DealShare, and I think that was our thesis to invest behind DealShare 2 years ago, 3 years ago when we first invested, which is, hey, the likes of Big Basket and Grofers and Amazon Pantry, they're serving the 10, 15 million households really well, but they haven't been able to penetrate the next 50 million households in terms of their sort of requirement of ordering staples online and ordering sort of FMCG online. And so I think that's a broader theme we're chasing, which is next 50 million households. And how do we because I don't think it's about simply extending the customer segment. I think you need to reimagine supply chains from scratch. You need to reimagine customer acquisition from scratch. You need to reimagine, your entire, org structure, because unit economics are very different for that segment versus existing segments. So I think that's the theme that these are some of the themes I think we're spending time on. I'll tell you the big change that has happened for Matrix as a firm. And if you go back and just look at the companies that are IPOing today, right? Zomato, Dippy, first-time founder. You look at Bhavesh from Ola, first-time founder. You look at Swiggy, and you look at all the companies that are sort of well-known names today. I think the first generation of internet entrepreneurs were basically the young, daring, sort of fresh graduate archetype. And that's great. And I think those guys will continue to create some of the largest outcomes, as they have been in US and China as well. But what separates US and China, or what separated till today US and China from India, was we didn't have this cohort of repeat entrepreneurs, right? And so if you see some of the investments we've done in our latest fund, whether it's a Jiten, who's now running Jupiter, whether it's Amit Lakotia, who is now running Park Plus and earlier was part of Make My Trip and Tokopedia and PTM. Jiten was obviously Citrus Pay. Whether it's Medda, who runs DealShare, who was earlier Metro Cash and Carry, whether it's Sandeep and Anindya from Stanza, who would actually help student housing business in Europe scale. So I think we're seeing this archetype of sort of repeat, and they may or may not have been entrepreneurs in the true sense before this. Some of them were executives in sort of successful companies, but I think that archetype is emerging, and honestly, it's a very different experience working with them. We've doubled down. I would say, maybe 40-50% of the bets we've made in Fund Three, which is our latest fund, have been this repeat archetype, right? And when I talk to my US colleagues and China colleagues, a lot of them would share these stories with us, saying, "Hey, we backed this person in Fund One. In Fund Two, his sort of CXO started up. We backed him or her. Oh, then the same entrepreneur went and started a second company, and we backed them again." And I think that part was just missing from the Indian
Yeah.
ecosystem. And I think we're seeing so much of that today, where just like the likes of Alibaba and Baidu and Tencent just basically spurned the next generation of entrepreneurs. We're seeing that happen in India very, very rapidly, and I think that's an ecosystem we're just staying on top of.
This is
Absolutely. Go ahead.
this is so well said, Tarun. And thank you for doing this. I feel like most of our conversations are just as friends, and it's so great that you're being transparent about what you're going through as Matrix with all the folks in the room. So really appreciate you doing that. One thing I wanted to talk to you about is can you dig in a little bit more on what companies like Dealshare and Oirickshaw, which is also I think like built for the next 50 to 100 million people, etc., are doing. I remember like when we met in Mumbai, you told me about this oil brand and the soap brand that Dealshare has created. Because Medda, as you mentioned, comes from a grocery background. He understands private labels. So what was happening is in Jaipur, like people were buying Dealshare's private brand, even though for years, like very popular brands from Hindustan Lever and ITC and other companies had been in vogue. Can you talk? So two thoughts on that. One, can you talk a little bit about the preferences of the next 50 to 100 million consumers in India? Like, if I thought that someone in Delhi or Bangalore would like give up on like a well-known brand like a Surf or a Rin or Britannia or whatever, and go to the next no-name brand, like we'd all laugh, right? But that's happening in so many cities in India, and companies like Dealshare are pioneering it. Can you talk a little bit both about that change in entrepreneurs going after the next 50, 100 million users, and also the boldness of the founders in like doing that so early in their journey as a startup?
Absolutely. Great question, Anand. And we're together in both Oriksha and Dealshare. So let me maybe just I'll spend a quick minute or two on each company. I think you picked the theme right, right? Both of these guys in some ways are going after the next 100 million users, and like I mentioned, that's a theme we've been going after. So I'll start with Dealshare. I think what really struck me about Dealshare was one is just the obviously it's a very, very large market. It's several hundred billions, but nobody's been able to really crack it, right? And Kirana is still king when it comes to 95% of how India shops grocery, and a lot of people look at Dealshare and say, hey, that's the Pindow Dow of India. I actually and me and the founders think of it very differently. Uh, we're looking at this much more as a, hey, if DMart were to be built on mobile today, what would that look like? Or if a Costco were to be built on mobile today, what would that look like? Right? And I think that's the thesis, and that's where we started from. And I think some of the elements of that sort of thesis are, one is obviously differentiated, consumer segment that they're going after. Second is, the price point. Like today, the people on this call, mostly when they order groceries, they're buying, a basket of 1,500 rupees, 2,000 rupees. That basket will, last them maybe, a couple of weeks. And that's essentially their shopping behavior, right? And that's the price point at which economics for some of these other companies work. The next 100 million, they don't have that kind of cash flow, right? And so they're looking for something saying, hey, I don't mind ordering more frequently, but I'm looking for something that I can, buy for, maybe 300, 400 rupees, and maybe I'll order once a week, I'll order once in 2 weeks, right? Sorry, twice a week. But I need someone who can deliver to me consistently and sustainably at that price point. the third thing about Dealshare that is unique is there is a focus on local brands. So most people don't know this, right? Most of the large brands we consume, I mean, many of them don't manufacture themselves. There's a very large contract manufacturing ecosystem in the country. And so all the big brands that we consume typically outsource manufacturing to some small local manufacturer, right? Now, the challenge is that these local manufacturers have the know-how, but they don't have distribution. They don't have sort of, brand building capability. And so I think the value proposition that a deal share gives them is, hey, you're selling this product to, FMCG company X for 100 rupees. They're marking that up to, 200 rupees and selling it to the consumer. What if I were to give you, 110 rupees? So you're still making more than what you were making by manufacturing exclusively for that company. You already have the know-how. What if you were to manufacture this, put your own private label on it, and DealShare will give you sort of local distribution to begin with, but over time national distribution. And it's been amazing. We started with working with like people making local brands in oil and atta and ghee and bunch of other sort of day-to-day staples. And these manufacturers have grown like 10x, 50x, 100x after distributing on the DealShare platform. And essentially, like I said, they have the know-how. They're happy to scale operations. They just didn't have a way to distribute it today. And so I think DealShare solves that. And the reason why DealShare is able to do that is because we don't carry 50, 100,000 SKUs. We focus on 800 to 1,000 SKUs, which are sort of the fast-moving SKUs for a given micro market. And the consumer isn't loyal to a brand. These are value-conscious buyers. So as long as you're able to deliver value to them at that price point, they are basically putting their trust on DealShare, saying, hey, DealShare would have done the vetting to make sure that I'm getting a equally good, if not better quality product, but at a significantly lower price point, right? And so I think that's basically what we liked about DealShare, and a bunch of other things, obviously, but just at a high level, that's the thesis we backed. And because we carry only 800 to 1,000 brands at any point in time, or SKUs at any point in time, essentially our entire supply chain is significantly simplified to basically serving only those 800 to 1,000 SKUs, right? So that's
Yeah.
why. OE rickshaw is very, very unique. If you look at the price point at which some of the earlier version of mobility companies, Uber, Ola, a bunch of others operate at, those are generally operating at 15 to 20 rupees per kilometer, right? Now, if you see the top 10 cities in the country, there's about 3, 4, 500 million daily commutes that happen in these cities. Okay, if you just take the population of the top 10 cities in India. Uber and Ola today collectively do about 5, 7 million rides. It's 1% of the market, right? Now, the question we asked ourselves is, hey, okay, so what's happening with the remaining 99%? And obviously, a lot of it is, private rides on sort of own two-wheelers and stuff like that. But there is a large population that travels on shared rickshaws, auto rickshaws, buses, metros, and obviously metro, kilometers being constructed every single day in this country is at an all-time high. And the question we asked ourselves is, listen, that metro rider, they're not going to get off the metro station. They've paid like 10, 15 rupees for that metro ride. They're not going to, get out, fire up and, a cab hailing app and then say, hey, let me pay 100 rupees now to travel the last mile. They're looking for a very unique solution, which is extremely easy to frictionless to go travel that first mile and last mile, and it has to be extremely cost effective, right? They're not going to, like I said, they'll pay 10, 15, maybe 20 rupees at most for that last mile commute, but we don't have the density of sort of the metro network like a New York or a Chicago has, where every block there's a sort of metro station, right? And in India is not going to be built that way. It's going to be very different. And so somebody needs to solve for that last mile, first mile commute, and somebody needs to be able to do it in a predictable manner and a highly economical manner, given the customer segment. And so I think what we liked about OA was they had kind of reimagined that entire sort of shared e-rickshaw system, brought it online, and allowed a user to seamlessly book that and move that into a subscription service.
And Tarun, one thing just to get you to talk about that, I think when you first talked to me about OI and like I met Mohit and team, they were not doing this entire battery charging stack, right? So they pretty much
That's right.
like invented and built that entire stack in the over COVID, right?
Yes. So that's been actually one of the examples of companies actually thinking out of the box and focusing significantly more on the customer during times of COVID. And I've always maintained, all of us had heard the saying, crisis brings clarity. And I think we've seen that in several companies in our portfolio in the last 12 months. So again, just for this audience, I've already spoken about what OA does. But the question we asked ourselves is, listen, who's the most important stakeholder in this entire sort of e-rickshaw ecosystem? And the answer is very clearly the e-rickshaw driver. Now, e-rickshaw drivers' earnings were significantly down because of COVID, because just fewer people were commuting. And we said, hey, what's the way in which we can completely do a 360 degree surround of that driver? A, it will serve as a long-term moat for the company, but it'll also help increase driver earnings. And we said, listen, my rickshaws are sitting idle. So firstly, can I add delivery to it? And because it's electric and because the form factor is such that it can hold higher loads than a two-wheeler, but requires significantly lower loads than a tempo that needs a minimum volume for it to be a profitable sort of delivery. E-rickshaw is in that sweet spot where it's got the benefits of a electric sort of price point, and it's got a form factor where I can have smaller loads being sent much more frequently, right? And so we added delivery as a sort of second business line within rickshaw. And then the third question we asked ourselves is, hey, you know what? Today the e-rickshaw driver basically needs to just have like 2-3 hours of downtime, which they were using to basically recharge their batteries. And we said, listen, what if we were to provide a swapping sort of system where they don't need to have the downtime anymore? And for the ones who are willing to work hard, uh, that's an additional income, because the e-rickshaw has a natural limit into how many kilometers they can travel a day. And so if this e-rickshaw driver is doing both rides and delivery, they're going to run out of that charge by 4 p.m. 5 p.m. in the day. But for those who want to work an additional 3 hours and take home and extra 5,000 rupees a month, uh, we need to provide them this service. Now the beauty is, the moment you surround this e-rickshaw driver with a swapping service and a delivery service and a ride service, essentially they're hooked to your platform, right? Because they're dependent on you to get their batteries charged, and they're dependent on you for business. And so I think it's a very intelligent thing they've done. It's still early days, and a lot of the stuff needs to play out. But that's an example of going deeper into your customer and figuring out what else can I solve to sort of strengthen my affinity with this customer.
There's so many questions. I mean, they're fascinating to hear kind of that journey and how obviously there's so much of maturity in the market that actually shows as well. And folks, I know several of you have raised your hands, so we're gonna try to get through as many questions as we can, but we'll try to leave a little bit of room to get some of your questions answered. So Tarun, I know you mentioned this a bit, with Zomato, obviously the IPO coming up. There's been a lot of, just taking kind of a step back, there's been a lot of activity around obviously M&A, consolidations, and IPO talks. What is the market sentiment in India for those two, and how do you see that impact on the broader India's ecosystem in the next several years?
It's a very big deal, Priya. I was talking to an LP last night, and they've been patient for better part of the last 15 years, right? And at every point in the last 15 years, I think all of us VCs, have always said, hey, IPOs are 3 to 5 years away, right? And that 3 to 5 years became 15 years, but I think it's finally here. And the 3 to 5 became 2 to 4, and then 2 to 3, and finally it's happening. So it's a big deal. While the system has seen some very large exits in with Flipkart and with Oyo, the reality is LPs still saw those as a one-off, right? And they were like, hey, okay, this is great, but is this sustainable and is this repeatable? Can I get to a point like I've reached in the US and China markets, where every year as I'm committing more capital to these funds, there is some liquidity that I'm seeing as well, right? Because that's when the cycle essentially completes. And so I
Absolutely.
think this whole and the most I guess strongest signal of a sustainable ecosystem is when there's enough companies that get to IPO scale, right? Because those companies will eventually go on to become larger companies. They will acquire more companies. More entrepreneurs will come out from those companies over time, and so on and so forth. And so I think it's a very big deal. I think a lot of the LPs have been waiting for this moment. They finally see this as India's moment has arrived. And I think, we've already seen enough proof points of in the last 12 months what's happened in the Indian ecosystem with so much capital coming in, where because they're seeing the numbers, they're seeing the issue with India has not been lack of IPOs, right? The issue with India has always been lack of depth of market. IPOs was only a symptom of the problem. The problem was the market wasn't deep enough. We didn't have companies which were generating 100 million plus in revenue, growing 60-80% year on year with reasonably strong unit economics. And unless you don't get to that scale, public markets are very punishing. I mean, you can't list in certain exchanges, but even if you're to list, I mean, there was really no demand. And I think what we're seeing today is because there are these sort of massive consumer brands that are well known, that have reached IPO scale, are finally listing. I think it's a very, very big moment, and it's a much bigger deal than people think it is.
Yep, really exciting to see those trends coming out. Anand, you had a question?
Yeah, I was actually Tarun. If you can talk a little bit about the impact. I mean, the Zomato is obviously the one of the most beloved and one of the first out of the starting gate. But there's certainly a pipeline of companies that are ready to go public, right? Like both very large ones as well as some of the upcoming companies that are just like hitting that 100 million plus revenue run rate. Can you talk a little bit about what this does to M&A, for instance, and additional IPOs that happen, and also like given some of the funding that's happening, all this the flurry of activity that's going on. Is there also like there was this thread around how hard it is to like hire in India right now if you're hiring like engineers and product managers. I'm sure it's true across the board. Can you talk a little bit about like the downstream impact of that on things like hiring, things like the quality of founders leaving and starting, M&A and stuff like that. Just the impact of this on the broader India ecosystem.
Yeah, I think great question, Anand. I will say maybe two or three things, right? Just the way I think this is a big moment for LPs and obviously VC funds and so on. I think it's a very big moment for employees and specifically early employees at these companies, right? Not just obviously, I mean, finally the dream of ESOPs and the promise of ESOPs is coming real. Um, People are have seen the journey of 0 to 1, 1 to 10, and 10 to 100, right? And like I said at the early part of the call, I think one of the things that was missing in India is there were very, very few people, I mean, almost non-existent, who had seen a real 1 to 10 and a 10 to 100 journey, right? And so I think what just imagine right now, people who have been part of Zomato for the last 5, 7, 8, 10 years, whatever, however long the company's been in existence. Imagine the person now, the people who are going to come out from those ecosystems and say, hey, you know what? I've seen this playbook. I know how to hire. I know how to build teams. I know how to sort of build, strong customer value propositions. I know what it takes to engage with investors and sort of, share my vision and my dreams, right? And so I think, and they've been through tough times. I mean, and those tough times have obviously hardened them. They know it's not been easy. I mean, every single company that looks like a success today, whether it's a Zomato, whether it's an Ola, whether it's Policy Bazaar, at different points they all have stared at like low single digit months of runway, right?
Yeah.
It seems like these companies have always been like meant for success. That's never been true. I mean, I don't remember, and you guys, some of the people on this call who I distinctly remember this thread. 4-5 years ago, maybe 4 years ago, there was a lot of negativity overall about overvalued companies and how investors are crazy for giving these kind of valuations to these companies, and these companies are burning money, hand over fist and stuff like that. And there was a poll, I can't remember who ran it, but there was a poll, and it said, of these unicorns, which one is likely to go out of business first, right? And it's ironic, and that time the only unicorns in the ecosystem were Flipkart, Ola, Zomato, and maybe a couple of more. And Zomato was the one that got the highest votes, right? And I think somebody should take that tweet thread and put it up back up when we're seeing that same company, list at anywhere between 8 to 10 billion, right? And I think,
Yeah.
and that's what I'm saying, right? Like the confidence that gives you when you've been battle hardened, and those same people are now going to come back and say, hey, it's okay. I can. It's a tough. It's much harder than it looks from the outside, to build a company, but they've been through those sort of tough moments, and they will have the grit and the persistence that is required to tide through similar difficult times when they're running their own companies. So I think
Yeah,
that's
right.
under not as much spoken about sort of phenomenon, but very important. I think second
Yeah,
is ESOPs. Yeah, I mean, we all have been part of company and hiring discussions where in India the discussion first starts with, hey, here is what I was getting in my last company. I am expecting a 20% raise. So my discussion with you should start at that 20% raise and over and above that. And okay, all this done. Now let's talk about ESOP, right? Whereas in the Valley in China, people look at ESOP as a real tool, not just for retention, but they're looking to test long-term commitment and long-term alignment of vision between the founders and early employees, right? And these are people who are really taking a bet on the startup. They understand that early stage startups can't pay as much capital, sort of salaries. Whereas in India, it was salary plus and ESOP. Hopefully, what's going to happen now is a lot of these people will value the ESOP, and it's not just a piece of paper that you're signing. And I know salaries in
right.
India are crazy right now, and everyone is cribbing about them, and it's extremely hard to find talent. But we are seeing signs of people who have seen the value of ESOPs come and say, hey, you know what, it's okay. I don't mind taking a 30% pay cut from where I am today because I believe in your company. I believe that your stock is going to have incredible value over the years. And so I think some version of that hopefully will play out in India as well, just the way we've seen in US and China.
Yeah,
Um,
absolutely.
I don't know if I
Actually,
answered all the parts of your question, Anand, but just those were the two things that struck me.
no, this is great, Tarun. Actually, one specific thing I was curious about, and I'll like just ask you to talk about both aspects of this, right? So a few years ago, like 2016 or so, 2015, 2016, there was sort of this meme that, hey, some of the use cases for key categories in India will be more like the China growth than like the US growth, right? Particularly in fintech, particularly in transportation, use of technology by second tier towns, etc., etc. Um, how do how do you see that trend now? Like, do you feel like there's now we're in that stage where companies that grew in China are like happening in India, or do you feel like there's a start of like the 3.0 where there's like India specific like third generation companies that have already started, or we're still in the second generation? And then like the second part of that is we're also seeing some of the good parts and the bad parts of like tech growing really fast and becoming big, right? Like with the ant IPO and like
Yeah.
some of the executive changes in China, and we're starting to see some of the big tech versus government regulatory back and forths, and like it's almost like a boxing round with like 12 rounds, right? Like one round the companies win, one round the regulatory folks win. Can you talk about both of those trends? Like the way China went and the way India is going, Tarun.
Yeah, so it's been fascinating to watch what's happening with the China ecosystem. I'm not an expert on China, but with that disclaimer, I can tell you that I read this quote: "What the government giveth, the government taketh away." Right, and so that's some version of that is playing out, unfortunately, over there. But I think at least when I look at regulation in India, my sense is the government has done a fantastic job. Whether you look at sort of payment systems with UPI and Aadhaar and Jandhan and a bunch of other things, or you just look at the way different sectors government is. I mean, I don't think there's been a deterrent. In fact, there's active conversations happening even on the IPO and the listing side, right? Or talking about new listings, talking about sort of why startups are different, why tech companies you need to have a different set of sort of rules for allowing these tech companies to make losses for some more time. Or the kind of value it's creating for the country, making sure that these companies can be domiciled in India and can list in India. And the government is actively participating and listening, right? So in my mind, I think the government is doing a fantastic job. Obviously, things take longer than what they would otherwise take, but I'd rather have that than have this artificial sort of hand over me where we don't know at what time somebody will just come and take away everything that they've given us, right? So I think it's you know it, it, different contexts and different sort of things. Just zooming out, if I take a look at China, right, and this is a part that I think a lot of us, it's always good to zoom out and look at what's happening in China and see how that could be sort of instructive for India. So China has created about $3 trillion of market cap on the internet in the last 10 years. 3 trillion. Okay. Of that, obviously, $1 trillion has been between Alibaba and Tencent. If you look at basically, what are the factors that contributed towards this, right? It was basically China's GDP in those last 10 years grew from $3,500 GDP per capita to $10,000 GDP per capita. The internet users went from 100 million to 700, 800 million. The internet usage like 10x over the same time frame, right? Now, if I just take a look at what's happened in India in the last 5 years, thanks to Geo, our internet users have gone from 100 million to 700, 800 million. Our internet usage is not 10x, it's 100x. India as a country consumes the highest amount of gigabytes per month per user. I think we're at like some 16 gigabytes per user per month now, right? Which is just incredible. Like I don't think there's any other country in the world that consumes the kind of data that Indians consume. And if you look at our GDP per capita, it's growing. Now, it's not growing as fast as China grew, but if I put all those together and I say, hey, India's today $2,500 GDP per capita, it's going to get to maybe $4,000-5,000 GDP per capita in the next 10 years. I think I can make a case that India internet will create close to $1 trillion, if not more, of internet market cap over the next 10 years. Maybe it's 15 years, I don't know, but somewhere in that range. Now, out of the trillion, will some part of it go towards the large global sort of, the Amazons and the Ubers and, whatever else will do? Absolutely. But is there, 6, 7, 800 billion dollars of that market cap that we created by sort of homegrown entrepreneurs? Absolutely. And we're just scratching the surface. If you take the total market cap of all the companies in all the sort of tech companies in India today, it's still sub 100 billion, right? Like you add Flipkart, that's 37, 38 billion, and then everybody else put together is probably another 60, 70, 80 billion, right? And so it's sub 100. Like there's still another close to 7, 800 billion dollars of market cap that will get created. And so I think it is. I don't think there's been a better time to be an investor, to be a founder, to be an early employee at any of these companies. There is a lot of value that is going to get created. And honestly, that's what keeps us going, right? That's what, it's not easy building companies. It's not being an investor in these early stage startups. 7 times out of 10, you're wrong in sort of the bets you make and, your investments lose money. But what keeps us going and what keeps us, sort of chugging along is hey, you know what? I can be part of building some of these companies, right? In some shape or fashion, either as a founder or as an employee or as an investor. And I think that is the most exciting part.
Yeah, it's so amazing to hear again the optimism, but the numbers are speaking to it. Again, it's coming across from across the stages and sectors. So one of the things I wanted to kind of deep dive a little bit. I know we're over time, but Tarun, let us know if there's a hard stop. But I
No,
know we're
I think we can keep going for another 10, 15 minutes.
okay.
No problem
That's
from my
great.
side.
I know there's like a couple of folks who have been raising their hands and being patient. So one last question before we kind of pull some of the folks up. You've been a strong supporter of obviously global SaaS companies, you and like Matrix India as a whole. Obviously some of the companies that maybe Anand and you have done together. Pesto, obviously, and you have Mo and Gate, Super Ops, Rocket Lane. All of them are proud to say that clients of SVB. SaaS has grown from India, significantly evolved in the last few years. It's a no-brainer that we are seeing it in the trends and in interest that global investors are having in India as well. What are some of the metrics and that you when you look at a deal that makes you go like, okay, that's the deal I want to be in? What kind of stands out to you and what matters?
Yeah, so I think a great question, and we didn't talk too much about SaaS, but again, that's the sector that I do spend some time on. I think it's fascinating to see what Freshworks will hopefully list sometime later this year or early next year. There's Browser Stack. There's a bunch of other large companies that are there in the overall SaaS ecosystem. My sense is, if you see version 1 of sort of software development, it was all services, right? And obviously, India created incredible value between Infosys and Wipro and TCS and several others. I think version 2 of Indian SaaS, at least, or Indian software was basically Freshworks of the world and several others in that same time, Zoho and a bunch of others, where basically we were looking at global products and saying, hey, can I build these products? Can I use sort of the Zoho playbook, so to speak, and use that to create a equally good product but at cheaper prices, right? And serve sort of mid-market and SME customers. And obviously over time, many of those companies have gone up market and gone enterprise, and um, done those things. But I think what we're seeing, and I think what excites me about some of the younger bets that we've made, is obviously the same experienced founder sort of phenomenon that I spoke of earlier. Both Rocket Lane and SuperOps are sort of ex Freshworks experienced employees, and before that they had sold their first companies to Freshworks. So is that repeat founder kind of thing that is playing out, which is very exciting. But also they are building, in my mind, they aren't looking at a global product and saying, hey, let me build a cheaper knockoff of this. They're taking basically bold bets and saying, can I build a world-class product and maybe a better than offering which exists in the market today, and use that to sort of acquire and serve global customers, right? They already understand how, as a country, we already have great product management depth. We already understand inside sales and inbound marketing and outbound and all of those good things that we've learned through some of these other companies. But these are daring entrepreneurs that are now saying, "Hey, let me build something that, I'm not just building, V2 of a company that has already done well and I'm serving a different customer segment. I'm actually going after very large, big, new, exciting problems." And in many cases, we're seeing sort of almost co-development, right? Like there are competing companies in the US and in the Valley that are building something, and there are Indian companies going after the exact same problem at the exact same time. And so it's going to be fascinating to see how we're able to compete on that sort of global stage.
That's right. And that's awesome. Thank you for the insights. Anand, you had a last question, and I'll
Yeah,
pull up some people up.
Tarun, I think the other thing that would be good to talk to for this audience is, I know Matrix has a content product called Matrix Moments, and I think if I'm not mistaken, you're recording this conversation and maybe like truncate it and use it
Yeah.
for redistribution. Do you want to talk a little bit about Matrix Moments before we start to take questions?
Yes, actually, the person behind Matrix Moments is on this call. She's Saloni. She's our sort of she's behind the scenes, so to speak, with the title of this clubhouse session. But she's really been instrumental in putting us on the sort of broader content map. So I'll tell you, what was the genesis of Matrix Moments, right? I think it was a conversation internally that we were having, saying, hey, we need to put ourselves out there. A lot of first-time entrepreneurs, a lot of repeat entrepreneurs, all of these guys are looking for, hey, if I'm taking money from you as a VC, what can I expect to learn from you? What can I expect through the journey? How will you help me? And one is to say, hey, here are the 5 things I'll do from you, right? The second is you're actually trying to create even more broad-based impact, which is, hey, whether or not I'm in business with you, can I sort of distill learnings from our other portfolio companies and just put it out there? And obviously it selfishly helps us because when founders come to talk to us and when come to meet us, they already know what we stand for, right? They already kind of know, hey, here is how Tarun thinks about the world, here is the way Avnish thinks about the world, here is the way Vikram thinks about the world, Rajat, and so on and so forth, and the rest of the team, right? So obviously it selfishly serves a purpose where people get to know us better and know what we stand for, but it also really helps us constantly intellectually challenge ourselves by saying, okay, so this company worked, what did they do that worked, and can I apply that to my other companies? Or, hey, here's a mistake this company made, and can I distill it down to some learnings that I can share with the broader ecosystem? Right? And I think initially we started writing, and I had put out a few articles, and Abhish did that, and then honestly we were just too lazy to write often, and we said, hey, why don't we try and do this as a conversation? And somehow that just found PMF within the firm, where we're always ready to get on a recording sessions like the one we're doing now, or the other ones that we've done. And we've broken it up into 2 or 3 different kinds of topics we talk about. One is just founder conversations, which I think generally end up getting the most traction, where there's a founder, it's from the horse's mouth, they're talking about their journey, they're talking about life in the trenches, they're talking about what's worked, what's not worked, stuff like that, right? The second is us as investors answering very tactical questions, right? Oh, how should co-founders decide split of equity? What are the key things I should look for when I'm signing my first term sheet? How do I handle a co-founder conflict, right? And again, with the benefit of having seen some of these situations play out in our companies, obviously there is some advice we can offer, right? And it's unbelievable, but obviously a lot of this content exists for the US market, but there's very little that has been actually contextualized for the India market when it comes to these things, right? And so I think, or like, hey, you know what? I have 2 VCs that are talking to me. how do I decide? Like, should I take money from one VC or should I try and take money from both the VCs? Or, hey, I have a seed round coming together, but there's a VC that's also interested. Should I close my seed round with some angels, or should I prioritize taking money from the VC? What if the VC doesn't sort of continue to double down in the next round? Is that a negative signal for my company? Right? And there's obviously founders have a lot of these questions, and I think we've taken sort of the opportunity to build this platform to actually just say, hey, here's how we think about it. We may be right, we may be wrong, but just putting yourself out there, and it's unbelievable, how much feedback we get, both positive and negative. Mostly positive, thankfully. But coming in over email, a lot of our episodes, people play back to us. Avnish has done. I mean, probably he's done the most clearly. But he's got this recent episode on the hack job, which is around gamification and hacking growth. He's spoken about a bunch of other things, and a lot of founders we talk to say, hey, you know what? We learned so much in that 1 hour conversation, and so it's honestly it's become a big source of just us being able to keep our founder NPS high.
And again, thank you, Tarun, for doing that shout out for Matrix Moments. One of my favorite, I know we were supposed to dive in, but we're way over time, is Avnish's one. There's a section about product versus distribution. I thought that was very fascinating.
Yes.
Again, these are simple, like you can just put it on and do your stuff, but it's so relevant to the founders, whether be it you're at the early stage, growth stage, or late stage. So many gems that are from folks who've been there, done that. So absolutely amazing. So do check for the folks in the room. Please do check it out if you have not done so already. Tarun, I pulled like 5 people up for questions. So the folks who are there, please make sure your questions are short, brief, and the ones that's not repetitive to what's been already talked about. And if you can keep it Twitter style, that would be great. So Abhishek, we'll start with you.
Thanks so much. Hi, Tarun. Thanks for taking my question. So, can you hear me?
Yes,
Yep,
I
we
can
can
hear you,
hear
and
you.
my pleasure.
Okay, great. So yeah, I'll be quick. So I've been an ex-co-founder myself, and I've been in an Indian ecosystem. My company got acquired by Trebo Hotels actually in 2017.
Oh, lovely.
So I've had some,
Yeah.
yeah. So I've had some first-hand experience talking to investors and VCs, and I did notice some trends back then, and I would just want some quick insights about that. So one thing I've noticed is that in the past decade or so, beyond a certain stage, many Indian startups have to seek funding from external investors, especially the large ones like SoftBank, and even some of our most successful companies like Ola or Paytm, are in that category. So do you think there is or has been a lack of liquidity among Indian VCs, or is it mostly because they were risk averse, or is there any other reason that I'm missing here? And do you see that trend changing going forwards now that we have IPOs finally happening in the Indian startup ecosystem and more Indian VCs finally taking sponsoring the late stages of quality startups?
A good question, Abhishek. I think I don't see it necessarily as so. Here's what's changed, right? If you told me 3 years ago a company that needed $100 million, um, it was in some ways, dependent on only the likes of a SoftBank, I would agree, or I would kind of agree. Today, I mean, if you just look at between Tiger Global, between Steadview, between Koto, between Cora, between Insight, I can name like 20 investors that one can go to raise 100 million. Now, admittedly, several of them are global investors. Just because, like I said, we're still a fairly young ecosystem, right? But if I take a look closer home, like if you just see Westbridge, traditionally done, later stage private equity and sort of public market investing. In the last 12 months, they've invested in 2 of our companies, right? One is DealShare, which was announced, and there's another one which will be announced very soon. They're writing 40, 50, million checks, and they're happy to write 100 million plus checks in companies that are working. And so I think we will see a lot of sort of local growth capital that will also emerge. And going back to my earlier point around IPOs finally creating value, you will see large Indian family offices that today had real estate and public markets as an asset class that they would invest in. They will start moving a lot of their capital towards early stage ecosystem as well and private ecosystem as well. And so the reason why they weren't doing that today is many of them just didn't believe in like that these companies would actually emerge and become IPO scale, and that they would get their sort of capital back. And so and with handsome return. So I think going back to the earlier point of the IPO, I think it's important in more ways than one. And if you just look at like today, like take the likes of Edelweiss, IIFL, Motilal Oswal, all of these guys are now setting up pre-IPO funds to invest in startups that are 12 to 18, maybe 24 months away from IPO. All of those funds can put 50 to 100 million to work now. So I think it's already changing.
Thank you, Abhishek, for the question. Divik?
Hi, thanks, Priya. Tarun, hi. My name is Daivik, and my question was related to mobility, which is something that we didn't touch upon at all. When you look at the whole ecosystem of mobility, I mean, I'm presuming I am talking about electric mobility alone. Which of the sectors of mobility excites you? What I'm trying to ask you is it the OEM, is it the battery manufacturer, or is it the services? That's the first question. And a follow up to that is, do you think shared mobility in its present form factor is the right way that you foresee shared mobility being executed as days go by? Thanks, Darren.
Great question, Divik, and thank you so much for that question. I hope I pronounced your name correctly.
That's right.
But I think starting with electric, we're still in forming our point of view because it's still very early days of if I look at mobility, we're basically still at day zero, right, when it comes to electric in the country. Now we clearly believe in OEM because we've backed the hopefully what will be the largest electric OEM in the country, which is Ola Electric. They will also build all the battery technology in house. So in some ways, we've already kind of bet on the OEM and on the battery technology. Is there a services play? I think there will be a services play. If you look at sort of the likes of Vogo or Bounce or several other companies which are in that sort of sharing space, I think the economic models of those companies will only make sense when they move to electric fleet, right? And we've seen some version of that play out. And so I think we're investors in Vogo, and over time they will move the entire fleet to electric. So short answer is I think there will be value created in all three. I don't think we have a view that there will be there's only one or the other that one needs to pick, and we kind of in some ways have exposure to all. On the form factor for mobility, I think like I mentioned earlier, I don't know if you were there for that conversation. If you look at the current form factor, right, which is largely basically cars and maybe to some extent auto rickshaws, collectively these companies are doing about 5 million rides a day. If you just take top 10 cities, I think there's 500 million rides per day that are happening. I think there's an opportunity for somebody to come in and create another mobility company doing 10, 15, 20 million rides a day. The challenge is it's not going to be at the price point. It's not going to be at this 15, 20 rupees a kilometer. It's going to be in the 5 to 10 rupees a kilometer, which is the price point at which 90% of this country travels, right? Now, if somebody can basically create a product that can have sustainable unit economics at that price point, I think that's where the next 10 million rides per day company is going to come from. Our bet was we made two bets in that space. One is OA Rickshaw, which I spoke about, which is basically shared electric rickshaws serving the masses, and they operate at a 5 rupees per kilometer kind of price point broadly, right? Because it's shared and it's electric. And then there's Vogo, which was more of a personal mobility where it's bike sharing, so to speak. They're still figuring out the model, and still obviously because of the pandemic things have been slow. But those were the two bets we made, and so absolutely agreed. I think all of these form factors will need to exist, and if you see the 5 to 10, 10 to 15, 15 to 20 rupees per kilometer price point, different form factors will need to emerge that will solve for different use cases. I don't think mobility in this country is done. There's a lot of I mean, just you walk out on the streets, and we all know how hard it is to commute in this country even today. And so I think there's a very long way to go.
Thank you, Tarun. Venkat?
Hi, Tarun. So I'm
Hi,
Venkat.
Venkat.
So I have one question. Like, how do you see this edtech, Tarun? Like, edtech has become. Is it going to become a saturation, or is it a bubble now? Because Matrix have been invested in companies like Testbook and K1 too, right? Like, so all these
Yeah.
companies, like, how do you see that? How do you see all these things? Like, what is the future focus of edtech? Like, how do you define it? Because right now, like, we get personalized learning and all the options, right? Like how Byju's and Unacademy is going their way. Like, I just want to know, like, because we a couple of we work with like games and everything. So we have one virtual event startup as well, but we are just working on couple of products in virtualizing the environment of game development. Like I mean, like gamification in edutech fields actually. So I just want to know more about how it's going to be in the future. Like, what is the forecasting? Like, is it becoming saturated, or what happens like when a lot of people come into this edutech, right? Like, because there won't be everything will be more of like privatization. I mean, like everyone will be getting to it. So I'm just asking one question, like, what is the future focus of it? Like, what the investors will be looking into edutech domain like that?
Yeah. So Venkat, as long as I guess people are getting educated, there will be a technology-led disruption of how they are getting educated. So I think we continue to believe. Obviously, there are large and great companies like Byju's and Unacademy and Vedantu and a bunch of others that have sort of emerged. But again, if you just look at a percentage of overall education spend in this country, and you say, hey, how much of that is technology-led? What's your guess? Like, what percentage would be technology-led today? 1%, 2%, maybe, right? There is no reason if you look out 10 years that 10, 15, 20, maybe 30% of all education is going to be in some ways delivered over a technology platform, right? And part of it is because all of us are just now used to doing a bunch of things online, but part of it is just there is a personalization angle to it. There is multiple different cuts, doubt solving, and there's so many different kind of cuts that people are taking. So if you see education, what fascinates me about the tech space in India, at least so far, right, is if I take a 2 by 2 matrix and I say, hey, large TAM and large profit pools, right? Education, maybe gaming, maybe some parts of fintech, right? These are basically the sectors that come to mind when one says and maybe devotion again, something hasn't emerged yet, but over time something will. But these are sort of large, very, very large markets in India, which are several hundred billion, where there are companies that are generating very healthy profit pools, right? If you take e-commerce, large TAM, but you know, arguably even some of the larger companies, both offline and online, are still struggling to deliver large profit pools, right? And so I think edtech is fascinating because it gives you that sort of potentiality of both scale and profit. Now, the worry over there is with so much capital coming in, do those profit pools vanish because it becomes just so expensive to acquire a customer. And some version of that, by the way, is playing in China, right? I don't know if you're aware, but China CAC for edtech has just gone through the roof. It's almost impossible to build a company profitably there. So I think some version of that will play out in India as well. But I mean, you keep that aside. Is there going to be multiple cuts within edtech where there will be different kind of platforms that will emerge? Absolutely. Just the way, even though we have a Flipkart in e-commerce, there is a Nykaa and there is a Lenskart and there is a Misho and there is Dealshare and all these other companies. I think you will find multiple specialized versions of edtechs, which are vertical edtech platforms that will emerge.
Yeah, and Tarun, since I think Venkat mentioned Cam K12, which is a portfolio company of yours, I can
Yes,
say from a personal reference standpoint, like my little one has been an avid user is a customer there, and he's learning Unity, C Sharp
yes,
by Unity, and it's just fascinating to see the quality of service that you get, right? And now it's
correct,
all virtual, and
correct,
I think the pandemic has also helped push those kind of comfort, as you said, with those
yes.
experiences. So people are more.
No, and
So the world is
we
your
my
customer. It
son,
doesn't have to be.
yeah,
Yeah,
absolutely. No, sorry to interrupt. And my son, like he's generally very skeptical of all our investments, but the one that he personally uses is CamQ 12, and it's
exactly.
it's the one class I can tell you in the entire week because all the kids today are just so fatigued of online education. But the one class I see him look forward to every week is CamQ 12
One
because
hundred. We do it
he
twice a week, and my son wants all 5 days. So we need to talk about the cost
exactly
first. But yeah,
exactly.
absolutely. But Bhavish, last question for you. Go
Uh,
ahead.
Good morning, Tarun sir. Good morning,
Hi,
Priyanka.
Bhavesh.
Hi, sir. So my question is around you. In this conversation, you said that China initially they supported all the tech companies, and now they are like snatching the support they got. Do you think that India it could happen with UPI? And like, do you think we need more alternatives to UPI in the fintech infrastructure?
I think one of the benefits of democracy, I think, is, like I said, things take time, but we are light years ahead, right? I mean, the world over, the payments ecosystem of India is actually now seen as an example that even the US is trying to emulate, right? I don't think any other country has built something like a UPI stack, which is completely democratized. No single entity owns it, and so I to me, it's unclear. I don't know if I understood your question correctly, but these are not things that, like, these are sort of entities that the government has set up to actually democratize this stuff and to prevent sort of large private companies owning this sort of stack. This stack is available for anyone to use at any time, and there are sort of multiple stakeholders that the government keeps to sort of have the checks and balances in place. But in my mind, and similar versions of that, by the way, I don't know if you're aware, but similar to what the government did in payments, there is a e-health stack that is coming out, which talks about telemedicine and health records and a bunch of other stuff, and that will come out very soon. There's also an initiative to do this for mobility, right? Where is there a UPI-like stack for mobility, where you can stitch together, if I want to go from point A to point B, every single mobility provider can basically tap into that system and acquire customers, right? And can serve customers from it. So I think it's beautiful, like that the fact that we are putting out these sort of open source architectures out there and allowing various private companies to build on top of it. I think that's the most scalable way to do it.
Hey, Tarun, thank you so much for this. I know we are squarely like 30 minutes over our scheduled time, so really appreciate you staying so long and taking all the questions and discussions. This was great. I'm sure we could keep going, but thank you so much for your time. Love to have you back again. I'm sure a bunch of the companies that you're in. I think the first time we met, like you had just barely finished investing in Ola, and so can't wait to see companies like Ola go public in the coming weeks and months as well, and love to have you back as some of those things happen to talk about those journeys as well. Thank you so much, Tarun.
Thank you so
Thank you
much,
so much
Tarun.
for having me. No, my pleasure, Priya and Anand. Thank you so much for doing this. And I know it was delayed by a couple of months, but great to be finally doing this. And yes, Anand, fingers crossed. Hopefully, we'll see a lot more Olas, and hopefully, we all will see Ola list soon as well. So, fingers crossed. And it's a really exciting time to be part of this ecosystem.
Absolutely. Thank you so much, Tarun. Thank you, Anand. Thanks all for
Thanks.
joining
Great.
us
Bye.
today.
And thank you, everyone, for joining in. Hopefully, this was a good use of everyone's time. Thanks.
Thank you.
Bye.
Thank you, Tarun.
Thanks for tuning in. For more Matrix Moments episodes, you can head to www.matrixpartners.in/blog. You can also follow us on Twitter, LinkedIn, and YouTube for more updates.